Hello, I'm Kory Gill. You can find me on Twitter at Kory Gill, and today I'm going to talk about the FGMR, or Fear, Greed, Mean Reversion Strategy. And I'm going to take a look at this using Tableau and analyze the strategy over SPX and the VIX, the VIX. I have to give special thanks out to at Kerberos007 for the idea on this strategy. Check out his Twitter page for more information, and you can also find more information at my GitHub repo listed on this screen. Let's take a look at the data collected from the Thinkorswim strategy. Exported that to a CSV file, cleaned it up a little bit, and imported it with Tableau Prep, and it gave us a table like this. And you can see the data we have goes back 20 years. And we have trade data like this, where we buy to open, sell to close. We make 4.63 points on the /VX. That's $4,630. This strategy goes long and short. So you can see here we shorted 1 and 2 and then closed it, profit of 4,600. Here's one here where we ended up scaling into 5 positions and eventually closed them out. It looks like about 2 months later for a loser of about $4,200. In total, we have 145 SPX trades, closed trades, and 190 closed VIX trades. And these are the trades we're going to be analyzing. And I did take a look only at the closing trades as a way to measure the profits, and this will come into play later here, as you'll see. This is a very busy slide, but don't let this throw you off yet. We're going to walk through this. As you can see, we have the SPX, and we have the profit loss of each trade, and the running total of all those trades over time. And we look at the trade size, if it's scaled into 2 short positions, 2 long positions. And we can see here, this is a loser where it had 6, this is SPX, where it scaled in 6 times and ended up losing 247 SPX points. And we can also take a look here at the consecutive wins or losses. So this strategy had 9 consecutive wins, a loser, and then a winner, a loser. You can see down here how the trend goes. The VIX is a much more interesting story on this strategy, I think. As you can see, the profit just keeps climbing. There's this dip in 2008. As you'd expect, this is not tuned out to try to flatten this out yet. This is something we can we can work on. But we have steady growth in the end over the 20 years. 719 VIX points. And the color coding is wins in blue and the losses in red. And here we can see the trade size. There's some hefty scaling in where went to short by 9 or 10 units, long up to 6 units. The consecutive wins, here's like a 19 win streak, a 32 win streak, and the last trade it closed was December 3rd, 2019, and it's on a 25 win streak at the moment. Put a slider in here as well so we can change the date if we just wanted to exclude 2008 and see what the strategy looks like. We can zoom in a little bit here. This is a pretty cool way to use parameters to accomplish this. Let's move on. Remember, we wanted to look at the number of trades and how many here we have, like 1, 2, 3 times we scaled in -6 or short 6 trades. And we can see that here for the SPX. We can look here at 6. There's 3 times that we had a trade size of -6. And we can just look at the distribution here of the trade size of 1 short and closing trade of 1 short or 2, 3, 4, etc. And on the long side. And you'll notice a nice distribution here, as you might expect. The VIX, a few more. Remember, we had more trades on the VIX, so there's a little more data points here to look at for how many. Thought this was interesting. A way to look at how often does it scale in or out at a given size, and what the maximum number it's ever done. So the SPX is only, the max it's ever shorted is 6 units, and the max long has ever been 5 units before it's closed out a trade. You might be asking kind of the curve on this. I just threw up a graphic. This is not correlated to the data at all. I just threw up a graphic of a normal distribution curve, and it's pretty interesting the way this follows what you would see in just a normal distribution. That typically out here we're somewhere out at the 2 standard deviations or 3 standard deviations just based on this graph. And again, this isn't correlated to the exact data that we're looking at, but it's something interesting that I thought I'd throw in here. Let's look at the profit and loss of this strategy. The SPX wins 64% of the time, loses 36% of the time. So that's a 2-to-1 ratio, and it's still profitable overall. The VIX wins 80% of the time, loses 20% of the time. Much better win-loss ratio, and the profitability shows. And we can also look at, if we just take out 2008 again, we can see what this looks like. The ratios are going to stay this. This might not be connected up. I apologize. To update this, we're going to keep moving on. This is a very busy slide, but hang in there with me. We're gonna walk through this. Let's look at this. This is the strategy trade profit and loss in points by year from 2000 to 2019, 20 years worth of data. And up here we can see the running sum of each trade profit and loss over each year. So we can see how much it makes each year. And the running total of the gains we get at the end of over the 20 years, it's 2,779 total SPX points. And if we look at each trade, how much it added or lost, we can see where it's winning this drawdown in 2008 again. And how it's working here. We can also look, I put in a calculation to use ES and VX futures as a proxy. So ES is $50 a point. The VX is $1,000 a point. And we can see what this running sum of the trade totals means in terms of dollars, and how much dollars you would be winning or losing in a given year to end up at a total of $138,000 with this strategy just on one ES contract. The VIX might be a more interesting story here, as we can see the same thing of the sum of trades year over year. We keep adding on to get to a total of 719 VIX points. If we were to, and we can see the profits here stays above the 0 line almost every year except these two, 2008, and then it's profitable every year since then. And we can see what the effect is on the dollars on this area chart, and the running total of the gains. If we had one VX contract, essentially we're looking at $718,000. Okay, coming back in here, we can see how the VIX profits look over time to give us a total over the last 10 years, because I've taken out 2008, so we're only looking at the last 10 years. Over the last 10 years, one VX contract would have yielded $531,000 over 10 years. It's not bad. The win ratio looks good. Profitable every year, the last 10 years. This is a very interesting return, I think, on this strategy. Let's take a look at, we can always do some more pivots with Tableau and see what things look like if we look at like the profit and loss points by month of the year over the 20-year period. And again, these are closed trades only, so you don't see things in certain months because there was no closed trades during those months. So that's why you see the gaps here. And we have just kind of these, it almost looks like a spark chart, doesn't it? With the trade profit and loss over the months. And the same for the VIX. We can highlight on the VIX, and the colors get a little bit faded because the VIX and SPX are using the same color codes across all of them, and the scale is just a little bit off between the two. And this is, again, the last 10 years. If we kind of zoom in a little bit and just get the last few years, we get a little more granularity and when it's placing trades and the winners versus losers by the heat of these charts. Again, it's another way to pivot on this data. We can do the same thing and look at it by month and see which months appear to do better or worse. So here we have over the course of, let's use all time. So over all time, November, not good on the SPX for this strategy. But every month is good for the VIX with this strategy over the 20-year period. And if we just look at the last 10 years, we can actually see that every month is a winning month with the strategy, except for February losing just barely with the VIX. And here we've looked at the trade profit and loss in terms of points, and I also added the line to tell us what the trade profit and loss looks like in terms of a ES contract or one VX contract. So we get that number here by month. Something interesting. I'm going through these slides kind of quick here. You can always pause your video and go back and just look at these and study these. So we want to look at what's the current status of the FGMR strategy. Right now, the current strategy is short 2 VIX units, and you can see we shorted one here, we shorted one here. Did not generate a buy to cover signal here. It did not get shaken out here. And we're currently now way down here at the bottom near 12, where when the Bollinger Band, the percent Bollinger Band in this case, the 1.2 setting on the Bollinger Band, when that dips below 0, this will generate a sell and close out this signal. And if we just took profits, if we just closed it out today, you can see we're going to have a profit on 2 units here. We look at the SPX. It's currently short, and it started shorting here, and it added more shorts here, and now we're at these highs up here, and it's going to add a 5th short because right here, this 2.0 Bollinger Band just crossed 100, and when it crosses back under 100, which it will do, it will short one more unit for a total of 5, and it will not cover that position until the 1.0 Bollinger Band crosses underneath 0, which it is going to take a little while to do, but we look at the conditions of the SPX and where it's at, what mean reversion says it might do. We have the VIX setting up to say that maybe there's some more volatility in the future. We have this long period where no signals were generated at all for potential moves here, and that's why I put these vertical bars in here to kind of give us some indications of what might happen. So this is the current state of the FGMR today, And I'd like to thank you for watching this video. You can reach me on Twitter at Kory Gill. My DMs are open if you have questions. I'll try to get to them all. Thanks again for watching.